phase, right? So when we have this nice momentum, 1, 2, 3, coming through a bunch of trap areas, we then are expecting the next phase, which is going to be the trapping phase. And we all know what we're looking for when it comes to trapping, correct? That would be a W on the bottom edge and, of course, an M on the top edge. And this brings up the brief discussion I want to have on the ideal shapes of these trapping structures. Try to avoid the weaker M and W formations, those that don't have much of an extended move on the first leg. Basically, this slide is self-explanatory. Avoid these weak MWs. Look for these strong MWs where they are preceded by vector in price. Oftentimes, if you're one to follow TDI, oftentimes you will have outside the bands and inside the bands, outside the bands and inside the bands. What that TDI trick does is it pretty much forces you by a rule set to wait for an extended run for a first leg. It's very highly unlikely that you'll have an outside of the band condition unless you do have an extreme move on the first leg of an M or W. However, I want to note that there are many type 1 London patterns that do have this shape of trap structure that do not create the outside the band, inside the band condition. So the way I view that for a trade rule is mostly as training wheels to get you used to only looking for M's and W's that do have an extended move on the first leg. Again, I'll repeat myself, I don't personally trade using inside the bands, outside the bands rules with type 1 London patterns for the reason that between 15 and 20% of them will actually work out perfectly, but they don't create the outside the band move on the first leg. But if you're trading M's and W's that look like these here on the left, it's quite likely that you're not in a state where the TDI is kicking you a shark fin to show the first leg, in which case that TDI is very helpful for you until such time that you can get the shape of your M's and W's in proper order. And when I say proper order, what I mean by that, of course, is the extended move as part of the first leg structure. So we're now anticipating, obviously, our second leg move. And lo and behold, we can see we have a very negligible outside the bands move here. One could almost say that it's not outside the bands, right? So again, this is why I don't personally use this particular aspect of TDI to catch these trades. But if you're watching for these extended M's and W's, you won't have to worry about that. And now we get our prime entry here at 5:20 a.m. also. So both of these two trades, the EG and the GJ, basically just transpired at pretty much the identical time. Entry at market, stop loss below, and let's walk it through in far greater than real time. So each one of these candles is 5 minutes, and we're just chopping through it here. Again, I'm using my mouse wheel to advance the WSM viewer. So we can see here right at the very beginning of this move, we're starting to see channeling in our favor. Again, which is really nice as we do have 3 sets of breakout orders that have been triggered on this trade. And as well, remember we are in D1 long trend condition. And let's continue walking it through. And now we have our 918 cross, so that's keeping us in this trade setup, even though we're getting some panic volume pullbacks. Typical panic volume pullback to the 50 mid figure. Remember, this is a 50 right here. Very typical that a lot of dealing happens on both sides of that figure. So we did get the pullback and then starting to get the push higher. And there's our move into the water as well off day open price. And let's just see how price handles this area to consider possibly staying in it. Always expecting the pullback out of day open price, but notice the zone flip that held very clearly right here. Just a brief bit of discussion about zone flips. Let's cover this again here. The cleanest of all zone flips are zone flips where we get a distinctive breakout of an area with a single point or multiple points that anchor the area where the breakout trades happen. Remember, the ideal to look for is did we get breakout orders at that area? And if we did, it's quite likely the dealer will be hungry to take price up and knock out stop losses to break even. After you get a breakout order on, oftentimes you bring your stop loss to break even when your trade is pretty far up in the positive, and dealers oftentimes come back to these areas and then bounce away from them. So structurally, what we'll see is price rip back into that area, oftentimes with speed. Remember, the dealer doesn't want to give these guys any time to get out of their stop loss to break even. Dealer comes up, swipes through the area, and then continues down. All right, same for this other direction. Price pulls back into the previous spike high or set of spike highs, clears out breakout order traders that ran their stop losses to break even, and then shoots off away from the zone flip. And here's another look into the zone flip concept, where price has created a fresh high, pulled back away from it, price breaks through that high, and then pulls back to the previous high, only to then reverse on the area. A very clear zone flip depiction right there. And then, of course, my favorite zone flip chart that I do keep handy when anybody asks me, can you explain what a zone flip is? I always pull this one out because it's a beautiful daily chart in AJ, where you can see price broke through previous lows, came back up into previous lows, hit the area for a couple days, planted the inverted hammer, and then pulled away. And the name of this file, of course, is Trade Not Against D1 Zone Flips, which is absolutely true. So oftentimes I do see newer students, returning students who haven't been with us for a while, trying to look for a more complex answer about zone flips. And I assure you there really is not one. I don't want to try to overcomplicate it in your mind, and I don't want to compel you.
Welcome everyone
to look
to
at
the
these
DMR
in
session
any way
for
that creates
February
overcomplexity. Really what you're trying to do is to identify some type of peak structure, some type of spike. Oftentimes it's a single spike, as we can see here in AJ. Identify that area, then when price breaks through that area, simply come back and note where this area is. Very simple idea right here. Again, I'm not trying to compel anybody to get deeper than this. This is why a zone flip explanation only takes about 5 or 10 minutes and does not require an entire DMR to cover. So, of course, with regard to these zone flips, we can see price hitting the area and busting right through. That does sometimes happen. Oftentimes, however, price does meet the area and starts to create trapping patterns in the area. That's what we want to see, is we want to see trapping patterns in this area. Of course, the safest place to get your stop would be on the far side of a zone flip after it's starting to shift out of there. But this, again, is the idea we're looking at. And there's really not a lot more to it. The main component of it is going to be you practicing projecting these before they actually happen. So let's flip this one on the vertical just so you get a zone flip on the other side. Basically, the concept is identical. There is nothing complex about this, but I'll say this, that until you start looking for this behavior in the charts in real time, and of course in the WSM viewer, more often than not, it's going to happen. You're going to notice it a long time after it happens. You're not going to be able to take actionable trades in areas like this just as it's happening. All right. So understand that when we look at the WSM viewer and we roll through these zone flips, especially this one right here that we rolled through, that you want to get that out in front of price. So you wanted to have that area mapped out way before we got there. Okay, so that is where the WSM viewer provides an amazing benefit to you as you scope these out and paint them on your chart. There's nothing wrong with laying them in there just like that so they pop up to remind you of them. Nothing wrong with that. And it comes down into the zone flip and reverses off the zone flip. Price then comes down, hits the zone flip again, double tap to the zone flip, and then off she goes. So it's really as simple as that. The question is, were you able to see it back here? Were you able to perceive not only the first zone flip, but the second one, the deeper one, the one that was a little bit deeper? Okay, that's the idea that we're talking about. Again, it's going to be up to you. You can listen to me talk about zone flips until I'm blue in the face, but it's not going to matter until you get in front of them on an M1 chart, on an M15 chart, an M5 chart, and begin to play them out the way we're doing it right here, where we've painted the line before price gets there to be able to anticipate the pullback to that area, the second leg to that area, and then the continuation of the run, which we'll continue walking through now. Again, the 918 crossing over, maintaining the ideal split, of course, with the 9 above and the 18 below. Perfect order of moving averages, POMA. And on she goes up to the 0-0 figure, continuing to run higher into ADR. Pretty nice move. I can't even see a 382 pullback on this entire move right here. So although we want to target take profits in our trading, right? We often want to put a take profit in with the broker. There are going to be occasions in certain pairs, especially the GJ, where you are going to want to be able to modify your take profit area with the broker if you see this type of continuation move, especially the dead giveaway at this zone flip. When it held that area and then maintained above day open price, that was a super opportunity to hold this trade longer than perhaps your 2-to-1 or 3-to-1 target that you might have put in with the broker initially. So get your take profit out of the way and begin to walk this thing higher. And again, we can ask the question, where might we be going in this particular run? Where might it terminate? Of course, the answer would be possibly tea time. Remember this line right here, it's at 11 a.m. Eastern Standard Time, and that's when the London banks basically go on tea time, and oftentimes we see reversals. So let's walk this thing through and see how it does. Up into tea time, and there we go. Right at tea time, what's our price? 55.29s. So let's see if we even get back up there. It looks like we locked it at 55.29, at least for that first move. And we got just a little bit higher, 55.30, and started to get the typical late in the day sideways action. And into the close of the day with just a touch higher, but not all that much higher. So again, a super nice trade. Here was your 5-minute type 1 London pattern entry, anywhere in there. And did you have provision in your trading approach to hold it if you get a sturdy run? Again, some of these pairs have a tendency to make this type of move. And last but not least, let's remind ourselves that we were in D1 trend condition at this time in this pair. And we haven't covered M1 charts for quite some time, so let's spend a minute just walking through this trade setup on the M1 chart. Again, reminding ourselves of all the breakout orders that we had triggered. We had yesterday's blue tracer, we have the 50 mid figure, and of course we do have the Asia range. Sometimes the Asia box will be skewed on the M1 chart. I want you to be focused, obviously, on either the 5 or the 15-minute chart, but you can see how we dropped way down here. So this M1 chart is a little bit skewed in terms of where the Asia box started. That's to be expected. Okay, so again, our Asia box was just a touch bit higher on the other charts. Notice as well how the 50 figure on the 15-minute, actually this is a 5-minute, sorry. Notice that the 50 figure is sitting below the Asia box, where on the M1, the 50 is still within the Asia box. So again, what am I reminding you of here? Always reference the Asia box on the M15 chart, not on the 5-minute, not on the 1-minute, the M15 chart. And let's just put that right there to remind us, okay? So this was when we had our confirmation on our 5-minute chart. Here we are entering at market. And again, what I'm showing you the M1 for specifically is so you can start to train yourself with these zone flips. And let's watch a few play out here. There's one. Okay, so this is looking pretty clear here. So let's take a look at this zone flip. This zone flip is not really meaningful to you at this point in time. This zone flip was meaningful right back here. Okay, so can you identify trap areas that have yet to have price come back into them, right? And of course, with the viewer, we can't leave on a line permanently, but let's just draw it in enough times that it shows itself. Okay, so I just wanted to show you how often these zone flips happen on the M1 chart. So this would be the way to train yourself to see zone flips, especially on the M1 chart. Okay, so there's our leg 1 and leg 2 on the other side of a zone flip here on an M1 chart. And then, of course, off she goes. So that's pretty much what I wanted to show you with the M1. In addition, of course, the entry on the M1 ideally would have been right in here. This would have been your ideal entry, stop loss below. You can immediately see that our orders, our 1-to-1 reward risk would be 10 pips apart. These lines are all 10 pips apart down here on the M1 chart. So from this line to this line is 10 pips. From this line to this line is 10 pips. So you can see here, pretty nice 1, 2, 3, 4, already up to 5-to-1. And we know this thing pushed way, way further. So we're talking most likely about an 8 or 10-to-1 move on this GJ in line with an entry on the M1 chart. So here we go. We can count it just like this. So our stop loss was down here. So here's 1-to-1, 2-to-1, 3-to-1, 4-to-1, 5-to-1, 6-to-1, 7-to-1, and yeah, correct. About 8-to-1 if held up into tea time. Looking at almost 9-to-1, holding into this move, almost 9-to-1. So at the top edge, we got almost 9-to-1 on this type 1 London pattern. However, again, our entry was on the M1 chart. And let's continue on looking at last week's setups that were in line with D1 trends. Let's head over to USD JPY as well, Monday the 14th of June. Here was our D1 chart at 6 a.m. on the 14th, and we can see very clear D1 trend condition. Price is above the 50, 8 EMA is headed higher. And again, from the standpoint of the H1 chart, same story, price is above the 50, 800 EMA from the D1 chart is headed higher, so we are in D1 long trend condition. And I want to ask you right here, can you see the zone flip that's taking place where this candle is? Can you look back to the left and see it? I certainly hope you can. Let's draw it in together. This helped anchor this trade. It would have been right here on the top edge of those candles. Okay, so there is, of course, a little distance into that zone flip. We do sometimes see that. Remember, the objective of the dealer is to take the stops out at break even. Perhaps there were break even orders more positioned in this area as opposed to right at the entry, in which case the dealer came back and took those stop loss to break evens out of the market. But a pretty nice anchor point for a zone flip. And in this trade, we are looking at a type 2 London pattern. That would be one leg in the box and one leg out of the box. Even though we came slightly beneath the Asia range, you can see starting to close above the catch up here on the 15. But if you notice here, it says CM5 chart for entry. So if we take it to the 5-minute chart, we can see again, this is our first leg, and then this is our second leg. One leg in the box, one leg out of the box. Again, slightly getting below that Asia range and tapping the Mayo. Type 2 London pattern long, in line with the D1 trend. And this, of course, is our drawing of the type 1 London pattern. And you can see above is a variation. Our first leg was at the very beginning of the box, right down here. And then, of course, our second leg was outside of the box, right here. So we did not have this component, but we still had the one leg in the box, one leg out of the box, entry at the break of the EMAs, and certainly looking for your stop loss to be below. And let's walk this through. Pull back to day open price, very typical for that to happen. Whenever we're in proximity to day open price, expect the dealer to work the area. Don't expect him to just run away from day open price. Oftentimes there is a lot of volume sitting in that area. He comes back into it, retests it, and then starts his move higher. Again, watching our 9-18 EMAs, holding us through this section of the pullback and working our way higher. Up, 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 and then somewhere around tea time, obviously being the ideal place to unload your positions. And then coming back to the M15 chart, just to give you a good reference point to deal with. And again, you can see how how clear this type 2 London pattern looks now. The only thing we're missing, of course, is this part right down here. In fact, really what happened was that it was spread over here into the start of the day. Notice you can see the tiny W inside there, very similar to the W drawn in the type 2 London pattern. And very, very nice move. Again, this whole idea was that we had the D1 long trend going for us as well. Okay, so type 2 London patterns, there are two conditions that I find I get high algorithmic numbers with the type 2 London patterns, and those, of course, are in D1 trend condition and AFP condition. Okay, so otherwise I would not be looking to trade a type 2 London pattern unless one or both of these conditions are met. There are rare occasions where we are in AFP condition and also in line with the D1 trend. But generally speaking, I would avoid this type of structure unless those two conditions happen. The one possible variation to this would be deep in L3 condition, which of course happened on Monday in a lot of pairs after a gigantic drop. I think though this one, I have no algo reference for this, so I'm not going to put it out there to look at this. I have no algo to back that up, whereas I have conservatively hundreds of hours of algo in these two variations. Obviously, the D1 trend
Bank.
condition, AFP condition. So that's the only way
They
that
took
I would
control of the
look at this setup. One last thing to point out is that many times I've mentioned this first leg in the box oftentimes creates a shark fin down below. You'll notice that we did in fact get a shark fin down below on this first leg in the box. And then of course you had the first leg of the W, second leg of the W, and then on up you went. Notice how clear it is to see after it's already moved out. Again, this is the main thing that I want a lot of folks to not have to get hung up with, is that it's a lot harder to see it when everything's back here, right? When price is back lower, it's hard to see this structure. So again, that's where the viewer comes in handy. You can see how price moves around on the MT4. The MT4 has got a few interesting qualities that the viewer picks up really nicely. So again, one leg in the box, we've got a first leg of a W, second leg of a W, this is the second leg out of the box, and that would be your entry. So I want you to be able to see those type 2 London patterns on the edge. I don't know of a way to do it other than to dial back into the actual entry candle. It's basically impossible. Well, I don't want to say impossible, but your timeline of absorbing these setups and being able to recognize them on the edge without actually looking at them on the edge, the timeline is stretched way, way, way out, okay? So that was a type 2 London pattern in GJ from last Monday. And let's now work our way over into Tuesday, the 15th of June, 2021. Let's go have a look at USD JPY as well. And for this trade setup, I want you to reference the M1 microcycle series. Link will be left below. It's a very involved series, quite a number of videos gone into this. Again, talking about entering on the M1 chart, entering on these bottom edges of the M1. And again, doing our due diligence in our check down, we can see we are definitely in D1 long trend still in UJ, and seeing our D1 trend as well on the H1 chart, paying attention to this zone flip, but also paying attention to the quarter point that's sitting just below. And let's take it to the 5-minute chart just for some perspective. Again, really eyeballing this quarter point that's sitting below. We know that a lot of breakout orders will trigger if price gets beneath that area, and it does so rapidly. So we're looking for very fast speed below that 0, figure. You can see a tap to it. Now we're starting to break beneath it. And at this point, we'd flip over to our M1 chart to get a sense of trapping structure. Again, we're looking for those nice deep W's here on the M1 chart. And there we can see it very clearly. The first leg, let me use a different color here. First leg swiping through the quarter point. First leg swiping through, pull back above the quarter point. Second leg swiping through, giving us a little bit of a board clearing move. Notice how they went down just a little bit beneath this area. And now you should be able to easily make out that W sitting just beneath. Okay, so it's going to take some practice on your side to calibrate to M1 setups. But M1 setups offer the lowest stop loss distance, so you can get pretty large lot sizes on. You see how this W plays out. We can march this one higher. You can see again the expected pullback. Notice how it pulled back into a zone flip area. And then let's watch this thing march higher. Okay, always expecting trap reversals at Asia midline. Asia midline is one of our waypoints, right? It's a waypoint. And for those needing the definition, it is a stopping place on a journey. And of course, for pilots, you understand waypoints are on your way to landing or takeoff, as well as in the middle of the journey. And so your objective at this time is to make the determination, do you take the 2-to-1 that's presented to you here? You can see we have about a 2-to-1 reward risk ratio, or are you going to hold for more movement? And one of our ways of determining that, of course, in terms of the strength of the trend, is our Fibbo trailing. So let's put a 382, eyeballing it just beneath that 00 figure. Of course, the 50 line would be right here, and the 618 would be right here. So let's walk this through. You can see the pullback to day open price does not break below the 382 below. That has us with positive anticipation of continued upward direction. So let's continue walking this through, and up she goes quite nicely. And of course, notice how it's locking up to this zone flip. Notice how price is holding during that area. Again, it becomes meaningful for you back here before we pull back to the area, okay? And then, of course, as price moves higher, then you understand that you should have known that was a nice area of possible movement additionally higher. And this looks to be the ideal termination point of this particular trade setup. Again, just eyeballing this. Let's put our entry above, our stop loss beneath, and let's just walk this through by eye, get a sense for what the reward risk ratio is. So I'm getting 4 and change here. I'm getting about 4.5, almost 5, not quite 5, but 4-to-1 reward risk ratio. Obviously, do the math. Minus 2% risk would give you a plus 8% take on such a trade. So a nice M1 TR50 in UJ from last Tuesday. Understanding that as taught in the M1 microcycle series, the fact that we got our trapping pattern off of this quarter point and we got our W formation right off that quarter point basically defined this trade. In addition to us being in D1 long trend condition. And making our way further down the list, let's have a look at Pound Australian, also from Tuesday the 15th of June, looking at an M1 trap through 00 setup. All of these setups, of course, being in line with D1 trend. And what's nice about us walking through this particular trade setup is that it did happen in New York session. So it's nice to see that we're going to walk through a few New York session trades tonight. And again, here is our D1 chart. We can see that price is above the 50 EMA. As well, the 8 EMA is headed higher, giving us a D1 long trend condition. And we are on our full screen H1 chart, just about the time where we pick up this trade. And you can see again the panic volume, this false move, this inducement phase, this extension and acceleration down into and trapping through the quarter point and yesterday's low. Note the time, it's 8 a.m. Eastern Standard Time. So this is a very unique opportunity. They don't happen all the time, where we get a strong extension move just in front of New York session in line with D1 trend long. This is a rather rare condition, but those two elements together oftentimes work out very, very nicely. Moving on to our H1 and M15 chart at 8 a.m., Tuesday the 15th of June. Additionally, we can see a bit of an outside structure here the prior day. So outside structure long, and now we're slightly trapping through the previous day's low of the day. Okay, so everything is looking really nice for a possible reversal. Notice that we've had sufficient movement off of this single spike on the top edge. So let's run a count on that top edge together. Okay, so this would be essentially where we'd start our count, and then let's walk this down. Pretty simple, right? You see the first push down, pull back, second push down, pull back, acceleration, extension, follow through, speed gives us our 3. And this is obviously ideal for New York session as well as London session, but in New York session, we really do want to see these 3s stack up before looking for a reversal. But we know that we have a lot of breakout orders triggered off the break of the Asia range, triggered off of yesterday's low, and triggered off of the breakout of this quarter point to the downside. Let's move on to the M1 chart, and let's walk it through as it breaks this 0-0 figure after this 6 to 8 hour move for the day. Okay, breaking through, triggering breakout traders to the downside. Okay, notice the pin bar in the railroad tracks, solid first leg right there, and understand the variations of W's that we're looking for. Okay, the first type of W that we're looking for obviously is the symmetrical W, where they're both about the same. Let me draw that one more time. Let's get rid of keep drawings so I'm able to erase that. So again, a symmetrical W, that's one of the types that we look for. We also look for the W where the second leg drops down slightly below, right? And then we look for the type of W where the second leg doesn't quite come down into the first leg and rolls out and away. This is specifically for price blocking. And what is price blocking again? I apologize ahead of time for the amount of students who Skype me asking me questions, and I send you back into the 4-day class. Well, there are a lot of principles that you need to have under your belt in the general class, the general BTMM class. One of them is price blocking. There are several other concepts as well. But in terms of price blocking, what this is it is traders short on this tip and the dealer not letting them get to a break-even position, keeping them in drawdown the entire time. If the dealer gets enough volume on this pass through yesterday's low of the day and the quarter point, if he gets enough volume on that, he doesn't need to come all the way back down. He'll do a second leg and then rise without letting these guys and gals out of their short orders. Remember, you have to think like a dealer when you're looking at these charts. It's one of the most difficult things to do. You really need to train yourself to do it. Okay, so now we're looking at the beginning of that second leg. Again, it's a slanty second leg where we have the first leg, and then the second leg is basically showing us some price blocking. But this right here is the ideal entry right here at 8:01 a.m. Eastern Standard Time. And again, let's remember that we are in a D1 long trend condition here, ready to rocket higher. So let's walk this through. Okay, a bit of a pullback. You can see here that's a 382 pullback. Again, if I pull the fib here, our 382 would run right through there. Our 50 would be here. Our 618 would be down below. So a type 1 trend is developing in GA. Okay, the M1 chart does, in some cases, inspire a little vertigo. It does get you, there's a bit of attrition to your chart vision after narrowly following the M1 a little too much. So one of the nice tricks we can use, assuming we got the entry here with a stop loss below, one of the nice tricks we can use is we can get the entry on the M1, but we can use either the 5-minute or the 15-minute to manage the order as it plays out. So let's jump up to the 5-minute at this time. Okay, so this is our 5-minute. This, of course, was the slanty W that we got in on the M1 chart. Right in line with the M1 microcycle series that's posted in the forum. Let's watch this thing play out. Understanding that the only hiccup that we got was this little 382 pullback right here. So we had a bit of a 382 pullback, and that's it. So type 1 trend in addition to D1 trend condition. So starting to see some oscillation typical at the high volume that comes in during New York session. but we're just trucking right through that area on this setup. Again, they are rare, but they're super powerful when you get a strong false move that's against a D1 trend condition. Very powerful combination right there. And now we're looking for reasons to get out of this trade. We're in, obviously, the tea time segment here at 11:05 a.m. And additionally, looking at this chart pattern, you can see the railroad tracks, set of railroad tracks, and the pin. Railroad tracks pin implies a little tiny M on the lower time frame. So this would be a good place to take profit on a super nice M1 microcycle entry. And let's go ahead and calculate the reward risk ratio on this one. And let's do that back on the M1. So you can see on the top edge on the M1 how nice this is. You can see the 3 hits to the high. Very nice move, right in proximity to tea time. So let's estimate a reward risk on this one. And so our entry would be here on the second leg, stop loss below. We've got a 1-to-1, 2-to-1, 3-to-1, 4-to-1, 5-to-1. Almost a 5-to-1, depending on, of course, where you got out of that. So a high 4, let's just call it a 4.75-to-1. And this, of course, gives you at minus 2% risk if you have a broker that will allow that large of a lot size to be put on. You have a minus 2% risk for a plus 9.5% gain. So very nice M1 trap through the 0-0 figure in GA from last Tuesday. And making our way through these New York reversals, let's go have a look at EJ from last week. Also noting that it was in D1 trend condition. Turning to the D1 chart, price is above the 50 EMA. 8 EMA is headed higher, giving us, of course, D1 trend condition. On the H1 chart, you can see as well that we are in AFP reset condition. So this is a trade setup that not only had D1 long trend condition, but as well was in AFP reset condition. So remember, hold your control key to get the straight up line. And the reason I'm calling this a reset and not a peak, so let's check out the last reset. It was right there. And follow me with the count down on this. We had a 1 and a 2. We could obviously put the 2 here, but in typical H1 market maker cycles, our push counts are a day apart. So in this case, we only had to move down to a 2. You can see we did not break H1 TDI extremes, neither did we break it back here. So this was a peak reset, and we closed greater than 50 pips, giving us AFP reset condition long, also in line with the D1. And we'll take it up to the 15-minute chart. 15-minute chart, as you can see here, says CM5 chart for entry. So this entry we're looking at on the 5-minute chart. And here we are on the edge of price. At the entry, you can see the very clear W formation. At no point prior in this entire move do you see a W, right? Let's just walk it back up, and you tell me if you see any Ws in here. Okay, we could possibly say that this is a W, but look how tiny it is. It's not as defined. Now I'm starting to see that deeper move, right? So shallow W versus an expanded W. So this is a little guy, right? Looks like one of those. And then we come down here to the one we're actually focusing on. Now you can see how that's a bigger structure. So that's how you keep from getting sucked into those little tiny Ws. Also notice breaking through our blueberry and coming almost in contact with the Mayo, not quite, but this gives us the opportunity to put our stop on the other side of that Mayo. So stop on the other side of the Mayo, entry at market, and let's watch this thing pop up. Now, of course, we could get, and especially in New York session, nothing wrong with waiting for the discounted entry on these pins on the pullback. Nothing wrong with that. And there's also nothing wrong with taking some of Carr's entry ideas, the 1/3 pullback that he does pretty much most of the time, especially on the 15-minute chart. You could apply that to New York reversals, absolutely. And so let's let this play out. A big reminder that for New York session, I don't want you looking for the big moves like we see here. That is a typical London into New York move. We're looking for smaller moves. You can see, obviously, we got our entry somewhere in here at market. Remember to factor in the spread. Stop loss, I'd like to see the stop below the Mayo in case they did one more swipe back to it. And you can see here pretty clearly, you're sitting at about a 2-to-1, which is really solid for New York session trades. Okay, and that was about it as it rolled out of there. I want to also look at the 15-minute, 1 second on this. And again, walking through that W on the M5 chart here, walking it through, notice how the 50 figure was a fine target to have. Notice as well, we're starting to get trapping in between the extremes of the day. That's very typical for New York session. We need to very clearly differentiate London session and New York session in our minds. And this drawing perfectly illustrates the difference between the two. Huge volume in London session, big, large moves. Then you start.
Our next speaker is someone who could tell you
diminishing volume as the day goes on. So as the day is transpiring, we start to see moves back inside the extremes. See how that wedge is being created? Most New York session days terminate with wedges. Go check it out. Go pull up some charts and look at the way New York session plays out. Oftentimes we have a high and a low, and then we start making moves in between those two areas. Let's go back into that 15-minute chart. Again, here's your high, here's your low, so we can anticipate the beginning of this move back into the range for New York session. Again, referring to the drawing, this is very typical for New York session. That's not typical for London session, but let's watch this thing play out. Let's walk it through. Okay, see how they trap back into the range into the close of the day? See how they've created a high, created a low, and then you can see this chop basically trapping the top edge and the bottom edge of this move to create the wedge into the end of the day. Very typical. So that was a New York reversal with the W formation just off the Mayo back on the 15th of June, 2021, of course, with the wedge at the end of the day. And let's head back to USD JPY. Let's walk through a New York reversal from Wednesday, the 16th of June from last week. Did I accidentally say July? I might have. I meant June. So 16th of June, 2021. Also in D1 trend condition. And of course, we're starting with our D1 chart. Again, price above the 50 EMA, 8 EMA headed higher, D1 long trend condition. H1 chart, again, price above the 50 EMA from the D1, price above the 8 EMA from the D1, and we have a really nice condition setting up here. Can you see why a reversal to the long side would be a nice idea right about here? I can give you a pop quiz. We've talked about this already. Do you guys see it? Do you see why this trade to the long side actually looks pretty good? We haven't even looked at the W formation down on the 5-minute chart yet, but there is one there. But just hanging out with this H1 chart, just want to make sure you see it. Wanted to give you enough time to see it before I point it out to you. But we got a very, very nice zone flip right here where price is anchoring to. Can you see how clear that is? Nice zone flip area. Let's go look at the lower time frames. Here is our H1 chart with the 15-minute on the right-hand side. And again, let me trigger the trade from the WSM viewer one more time. Let's go into setups and let's just trigger it so it shows the verbiage that says CM5 chart for entry. Now you can see already the 2 pins to the lows. Check out how many breakout orders we have cooking in this one. It's pretty nice. We have the break below the Asia range. We have the break below the quarter point. We have the breakout below yesterday's low. We have the breakout below the Mayo. And we have what is a zone flip into last week's high of the week. So we have a breakout below last week's high of the week. Okay, so we have quite a lot of breakout orders potentially stacking up to the downside. All the while we know this is in a D1 long trend condition. Let's go ahead and get into multi-screen mode here. Pop in the D1 chart. You can see again, D1 long trend condition. It says CM5 chart for entry. Let's go have a look. And at about 9:15 a.m. Eastern Standard Time, boy, isn't she pretty. I mean, a really, really nice chart. The only thing we're missing, of course, is a discernible high of the day 1, 2, 3 count, but I can still see one in here. Can you see the 3 count? I know it's not super clear. This is a nuance, but again, that's what we're about here in the DMR, showing you guys the nuance of a lot of this material. So what I see, again, I'm always attracted to high of the day. Where's the high of the day? Box the high of the day. Where's the first low and decisive pullback? Where's the first low and decisive pullback? Well, we had the drop low, but we didn't really have a pullback in here. Here was our first low with a decisive pullback, right? Then we had our second low with the decisive pullback, chop, typical L2 move, and then finally the 3. And notice the depth of the move. Only 2 candles basically provided us the move down into the low of the day. And then, of course, I don't need to assist you in seeing this beautiful W with the second leg railroad track. Remember, when the second leg of an M or a W has a railroad track, we can go ahead and get in before we get the close above the EMAs. But you can see this one actually did make a close right on that EMA. So definitely in at market, stop loss below the low of the day. And let's go ahead and walk this through. Remember as well with New York session, you're looking for shorter TPs. That is, you're looking for less movement. If you were to look at this chart and look for a possible reversal area, where would you cast your eyes to? Well, of course, you'd be looking at both of the EMAs converging here, both the Mayo and the water. You'd be looking at the blueberry from the previous day, and you would be looking at the 0-0 figure above. Understanding, of course, in New York session, we oftentimes do get truncated moves, right? They don't move quite as much. And what's nice about this idea of false speed is that many times speed itself can show you that you're nearing the end of the move, okay? So it is a definite truth that a lot of times we see this market maker cycle structure, and the greatest speed is in this last component, right? The greatest speed is up there. So what we're seeing now is we're seeing speed into those EMAs that we've already discussed. Might be a reversal area. Let's see how they handle that area. You can see them creating an outside bar, trapping through that Mayo, and then pulling right back. So your best take profit was on the top edge of this structure right here. Now that's not always going to give you your 4-to-1s, your 5-to-1s, your 6-to-1s. Heck, it might even not give you your 2-to-1s. In this case, what it gave you is it gave you something just near 2-to-1 if you caught the top edge of that pin, but most likely we're sitting at about 1.5-to-1. Now for New York session, you have to be ready for shorter moves, smaller distances to take profit. It's a characteristic of New York session that will not go away. It is pretty much a permanent condition of New York session that a good proportion of trades that happen in New York will only run a small distance compared to the large moves in London session. Okay, so that got us through 1, 2, 3, 4, 5, 6, 7, 8, 9 setups from last week. I urge you all to go ahead and observe these additional setups that were in line with the D1 trend, including 2 lovely Type 1 London patterns, one in EA, and another one in GA. This one's super sweet. Again, the markup of this one should include the 3 count. It's very clear. Here's your top edge. And let's have a look at our pushes. Super clear. 1, 2, and 3. This would have been your first leg. And then creating the second leg, entry in this area. Okay, so entry at market, stop loss below the low of the day. And on up she goes. Giving us a really, really nice move for, let's just go ahead and estimate this out in our distance above that candle just a little bit, stop loss below. And let's just eyeball this one. Not precision here, but you can see you got an easy 3-to-1 on this Type 1 London pattern on the 18th of June, which I believe was a Friday, so Friday the 18th of June. So a plethora of nice trades from last week. Again, take your self through these trade setups as best as you can. Of course, there were even more if you discount the D1 trend condition. And there's only so much time in the day, but that is the walkthrough of trades from last week. I want to talk about another subject here, which is very important for traders. And I've made a diagram here that explains a gigantic concept. And so I don't want to force this. I want to take my time here in the last few minutes of this DMR to walk through this trade focus gradient. And this is a great quote from Arnie Palmer. Concentration comes out of a combination of confidence and hunger. Absolutely excellent quote. And that's what I'm trying to convey with this drawing. I want you to internalize into your own trading world. I'm going to start with this little cone shape over here on the right. It's a funnel. And it seems that when anybody is learning a subject, when you're becoming aware of anything new, when you're open to learning something, you have to pull in everything. It almost appears that you pull in too much information to get to the point that you can sift down and filter down into just the points that you need to focus on and nothing more. So we find typically novices in any discipline have a tendency to take in too much information. And professionals in the same skill set have a tendency to narrow down. They eliminate extraneous noise. And so what I've done is I've created this trading focus gradient for you to think about between the time of your trading, of course, between you and the terminal. It's really about the pixels on your screen, the mouse, and you yourself. And that's pretty much it. That relationship will always be the center of trading, right? So outside of the circle of focus, we have the environment. That could be environmental noise, could be the television, God forbid. Personally haven't seen one in about 25 years, 20 years maybe, give or take. But you want to try to get any type of external noise in your environment out of there, right? And then the next circle in you can see is internet distractions. And of course, I've made this YouTube red. Yeah, so I'm not discounting the fact that if you're so bored looking at charts, sometimes you need to have some type of stimulation. I understand that. But the idea is that all of these will take away from your ability to perform on the 5-minute and the M1 chart. We went through some trades tonight on the M1 chart. It's absolutely vital that you're really narrow and focused if you're trading the M1 chart. Same thing with the 5-minute. Things happen real quick. And when something gets away from you and you're watching a YouTube, well, that's the reason that it got away from you. So we want to eliminate this outer circle of internet distractions. Now we get to the next area, which again, oftentimes revolves around this novice into pro mindset. And that's that you want to discard unnecessary surplus chart analysis. It's watching too many pairs for too much information. There's nothing wrong with looking for 1 or 2 signature trades across 12 or 13 pairs, but you don't want to watch 10 pairs and look for 5 signature trades across 10 pairs. You get what I mean? There's a balance there. There's a balance that you are going to have to discover for yourself. Some people balance this out by watching 1 pair and 1 pair only. Maybe they have 3 or 4 signature trades on 1 pair, but that keeps their field nice and narrow. They're not unnecessarily looking at surplus chart information. So we want to get this middle ring taken care of as well to finally get into our zone, which is the most important part of trading that you're going to find. This transcends trading psychology and technical analysis and all of that stuff, because this is really about you being able to execute on your trading system. And it's super simple. You have a risk plan, then you have your signature trade rules, and then you're left with the unknown that can give you 3 possibilities. You can have a winning trade, a trade that stops out, and you can have a trade where you scratch out near break even. So you try not to concern yourself with forcing what this situation is going to be, always knowing that it's a probabilistic outcome. It never has certainty. It never will. Understand that you're going to need to allow yourself to discard a lot of information. So part of doing the algo historical work is that it begins to narrow down your focus into signature trade rules. Hopefully that's not 2 or 3 pages deep. You want to have rules that you can easily think of in your mind, 4 or 5 at the most, so you're able to capture the simplicity and then focus on being able to respond to the variations that probability is going to throw at you. As well, you need to be super tight with your risk plan. What is your daily walkaway threshold? When do you shut the computer off if you've hit a certain loss percentage of your balance? That's a huge help for you going forward to not get into revenge trading. Because if you've hit your 2.5% or 3.5% allocation of the day for your daily walkaway threshold, that's it. You turn off the computer and walk away. Instead of getting into some distractions, unnecessary surplus chart analysis, in which case the distraction alone keeps you from following your risk. You're going to need to spend some time doing a bit of calculation in terms of what minus 3.5% of your balance is. So you're going to need to allocate some brain food, I guess we could say, or allocated brain memory to your risk plan alone. Just getting your stop losses in place, calculating exactly what that lot size should be. Hopefully you have a tool now that allows you to streamline that process, but that's going to take some mental RAM, some mental random access memory. Understanding and following your signature trade rules, even if they're simple 4 or 5 rules, that's going to basically take up all of your brain RAM for the moment. So again, focus is important, but understanding what your focus is even more important. And it's so interesting from our perception of teaching this for a decade now. It's so interesting that the novices overcomplicate it. Novices take in so much unnecessary surplus chart analysis, watching so many trades, right? Watching so many pairs. Now, the caveat to this, and this is a very important point as well, when you're learning a new system, you need to have excess surplus chart analysis. You need the unnecessary information to begin to funnel down just the information you need. So when you're starting out, it makes sense to overtrade. That's why you do that in demo. It makes sense to watch a lot of different trading ideas from different trade instructors, different approaches, to eventually funnel that stuff down into your professional mindset, which I really equate in its best possible metaphor, like crawling through a little tiny narrow 2-inch pipe and eliminating everything else. Think about a pipe. A pipe is a solid piece of lead, right? Or the old pipes used to be lead. I don't think they're lead anymore because people get crazy with lead, but they're solid metal. So they're insulated, right? They're super narrow. I mean, just imagine putting yourself through that little pipe and getting tighter and tighter as you become more of a professional in your skill. You're eliminating all this excess noise. You're just going right down the straight and narrow into the focus of your signature trade rules, into the focus of your risk plan, and then into the focus of reacting to the 3 possible probability outcomes that face you. And keeping it very simple. Keeping it very simple. Get rid of the internet distractions, get rid of the environmental noise, and work yourself into a very narrow range of focus for your signature trade rules. Understanding the big picture here, big doors turn on tiny hinges, and big trading equity ramps turn on very tight, tiny focus, narrow, focused concentration. You really will at some point in time understand with the M5 and the M1 chart that you've got to have a little bit of excess mental RAM to be able to deal with the unknowns, right? The X is in the center of the triangle to represent the unknown, the unknowable as well. You're going to win, you're going to lose, and you're going to break even. You don't know which one is which, but you'll need to have that extra brain space to be able to react to the particular outcome. your risk plan, your signature trade rules. That's it. Okay, so you want to understand the difference between a novice and a pro. Again, caveat being new folks, you really do want to start with the excess because you've got to figure out which direction you want to go in terms of which pairs, which signature trades, and how you want to approach from a time standpoint when the ideal time is for you to trade in these markets. All right, so that will do it for the pre-recorded component of the DMR tonight, and we'll hand it over to the live Jim. And thank you, pre-recorded Jim. And yeah, so any questions about that, go ahead and fire them through. I think we're pretty complete with that idea. I want to let everyone know that we're about to change over into the pre-market session. So I'm going to end it here for the DMR proper, and we'll get right into our pre-market projections. Anybody that's hanging out with us, welcome to stay around. If not, have a good night and have great trading. We'll see you on Skype. Good night for now.